Welcome to the first episode of 2026 here on Count Me In. I'm Adam Larson, and I can't think of a better way of starting off this year than sitting down with Tim Naddy, the VP of Finance for the Savannah Bananas. In this episode, you'll hear Tim share his story from earning his CPA at the University of Florida, experiencing that first year shock in the Big Four, and ultimately finding his place leading the financial side of one of the most innovative teams in sports entertainment. Tim is passionate about preparing the next generation of accountants, and you'll get to hear his thoughts on why mentorship, storytelling, and practical experience are crucial for today's students and young professionals. So whether you're just starting your accounting journey, looking to grow as a mentor, or hoping to inject some fresh energy into your career in 2026, this episode is packed with insight and inspiration. So let's start the year off right together. Here's my conversation with Tim from the Savannah Bananas. Tim, thank you so much for coming on Count Me In. We're very excited to have you. You and I met when you were in Scottsdale for IMA's accounting conference, and I chatted with you because I was like, I want to chat with you and bring you on the podcast. There's so many different things we could talk about, but something that you're really passionate about is like the next generation of accountants coming on. And so kind of what inspired you to kind of say, hey, I want to make sure that the next generation is ready to go when they get into the workforce?
That's a loaded question, my friend. Okay, it's going to have to go all the way back to 1999, 2000 when I got out of school. And I will make this like TLDR, right? So when I came out of school, I went to University of Florida, graduated with a master's degree, got my CPA license. I don't say that to say like pat on the back. That's just what at the time that's what everybody just did, right? So if you were coming out of any of the top 10, top 5 accounting programs, that was their pick of the litter, cream of the crop of the business world, right? And so I got my job at PricewaterhouseCoopers. I had done an internship, which, I mean, let's be real, it was spreadsheet stuff, and it was making copies. I was working for the investment house, Bank of America investment team, and out of Charlotte, North Carolina. And I think I actually. Actually, I think I might have melted one of their copy machines. I was working. It had like this. It was beige, and then over the night you could smell it, and that wasn't toner. But then like there was like brown that was coming out. And I'm like, oh my gosh, this thing inside this thing is smoking. So if they're asking for reparations, I'm not giving it to them. You sent me to do the copies. But dutifully I finished that. But when I got out of school. One of the things I noticed is that, okay, it's really important to understand that everybody that was graduating at the time had all of those accolades. And so we all had an internship on our belt. We all had the master's degree. We all had the CPA license before we were even getting into, in fact, before we even get in our senior year. And so by the time senior year rolls around, we're just basically, everybody's like, where are you going to work? Where are you going to work? Everybody had a job. And so when you get down to PwC, and again, it's not a PwC thing. This is a Deloitte thing. It's an Anderson thing at the time. It's KPMG, Ernst & Young. I mean, you pick one of the big 5, big 20, big 100. Does not matter. It happens everywhere you go. And what ends up happening is you step through the doors, and all of a sudden, all of that knowledge that's in your head, I should say this, I should point the finger in, all the knowledge that's in my head was like, okay, I know how to, I think I know how, or I should say this, I know what to do. I don't know how to do it. So I have all the knowledge of what a cash reconciliation is, what a bank statement is, and all this stuff. It's like agree, foot, all these little buzzwords that you learn, and they actually mean something in the real world. Whereas I don't know, you just can't prepare people like that inside school. I should say this, in the traditional way. And the way that it was being taught is like, here's an audit, and it's the dermaceutics audit. Probably a lot of kids are still using it today. It's here's the same audit that they've been doing for the last 25 years. Now, if I went back and did that audit, I'd be able to crush it. But I also have 23 years, 25 years of experience there. When you first come into the industry, you're a deer in headlights. And I mean, I wrote a dissertation on this. This is the reason why I got into being a professor, was that I looked around and saw my class, they weren't getting fired. They were quitting. And I'm looking at this going, dude, these guys are really smart people. Where are they going? They were just like, I think I made a mistake. This is the wrong career for me. Like, whoa. Tap the brakes. These people are amazing people. They're very smart people. They're on their toes. I mean, they're working for the big 4, right? And they were like, they were falling up, boom, 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 boom. And so, and of course, a few of them, a couple of them maybe got fired because, they were a little bit too much of the fraternity guy for the business world. But it was one of those things where I was just I was very rattled. And so it ended up I had a conversation with my former audit professor, Dr. Robert Neckel out of University of Florida. I got the opportunity. We were talking about ice hockey before you record. Got the opportunity. We used to have PwC had the client had the Ice Palace, which at the time was the St. Pete Ice Forum. I don't know what it's called now, but that's where the Tampa Bay Lightning play. And at the time, Tampa Bay Lightning were just hot, man. They had the Rookie of the Year, Vincent Lecavalier. It was awesome. It was actually my first hint of getting into sports. I was like, this is pretty cool. I like this vibe. So anyway, so the guys walk around. I remember this. It was a Seminole that was talking around. I was like, hey, anybody here a Gator? And it's like, want to go to the game tonight? And I peek out from my cubicle on the ground. Yeah, I'm a Gator. It's like, hey, yeah, there's some Gator accounting professor is going to be in the box tonight. You want to go and hang with them? I was like, oh, yeah. So I got to go into the EXO Club, which was awesome, right? Never been there before as a staff for PwC. And I'm thinking, man, right, pulling out. I see Dr. Neckel there. They didn't tell me who it was. I saw Dr. Neckel there. Now, Neckel and I had a pretty good relationship when I was in school. In fact, God's honest truth, I showed up to his Audit 2 exam, which was the final exam that I took at the University of Florida. A little bit tipsy because we went to the swamp before. It was our last test, and I already had an A in the class. And I took his test. Looking back, I was probably pretty loud. I would have given me a B too. But as I came down, he goes, "How do you think you did?" And I was like, liquid courage. It's like, I dare you to give me anything less than an A. He gave me a B. So I had a bone to pick with this guy, right? So I walk up to him, I was like, "Hey, Neckel, what's going on?" Give him a hug, whatever. And then finally, after he had a couple of drinks, I wasn't able to drink that night, but I was just like, I got to ask him this question. I said, I want to know why you didn't prepare me for the real world. And he just kind of looks at me with this look. And it was, I'll never forget it because it was like he knew something that I didn't. And I didn't like that. So he ended up starting to explain, Natty, there's no time to prepare you guys for what the real world really needs. And I'm like, that sounds like a bunch of cockamamie BS, right? I was like, what? That doesn't make sense at all. You have me for, in this case, 3 years, with all the different curricula, the 2 years general ed. And then you have 3 years of just pure accounting instruction. 3 years is a lot of time to prepare somebody for, I don't know, coming out of the gates, at least crawling. And so the way that he said, so I told him, I was like, it was that night. I go, I'm going to go back. I'm going to get my PhD, and I'm going to build a curriculum that I can actually do this. And he looks at me and he says, "Okay, listen, I can see that you're upset." I was like, you think I'm upset? I'm like, I can't believe I just said this to my former professor. It's like, he's going to go back. At the time, he was the PwC emeritus professor. And so I was like, oh man, he's going to go back to a partner, say this, that, and the other. But he never did. And he said, here's what's going to happen. You're going to go into your program, and all of the idealism that you have right now, everything that you want to fix, they are going to turn you inside out, upside down, to where you will be singing their tune before you leave. And I said, I don't agree. And he said, best of luck to you. And so I went back and got my doctorate, and as Doctor of Business Administration with an accounting concentration. And with this one in particular, I wrote my dissertation specifically on first year shock. So first year shock, to kind of give you a real quick analysis, is it really was coined by a woman around the 1970s, out of the nursing industry, and she wanted to know, why are all these new nurses who are coming out, why are they burning out so fast? And what she found is that there is a scale of competency. And now, if you look up the 5 stages of learning on the internet, they basically have embraced that and turned it into the stages of learning as opposed to the stages of competency. But if you say stages of learning for somebody moving up the channel, and then stages of competency, you just flip it over. It's the stages of competency looking the other way. And what ends up happening is that in the very, very beginning, you don't know what you don't know. So it's okay. I mean, you're a neophyte. Nobody expects you to know anything. In fact, in the Big Four, when you looked at, and you don't find this out until later, when they come in and they say, hey, here's your bill, you look at the interns and you look at the first year staff. A first year staff at the time when I was coming out was $180 an hour, but they would discount it down to $90 an hour. And you're like, well, why would they do that? It's because the staff don't know what they're doing. And the firm knows it. And so what they do is they say, hey, we're going to put a couple staff over here. We're going to train them over here. Are you cool with that? We'll do it half price. If that's what the mentality is at the top of the organization, how do you think they feel when it goes partner, senior manager, senior, staff? staff are already considered half off, right? It's like, and everybody up here knows it. So it's like, what are we going to do to actually make them a full-fledged staff accountant? Well, you don't become that until you become a senior. That's like you're granted into, or you're pulled into like the club. Now you can't be sued yet. Got 3 more years for that. But the whole goal is like, the game is I've got to get past 2 busy seasons so I can be a senior, so I can actually understand what I'm doing. Well, shoot, how am I going to do that if I don't even know how to put this knowledge that I got out in the university and apply it into the actual functions of what we need to be doing? It drove me absolutely mad. So what I did, fast forward to 2012, and I told you, there's a story. Fast forward to 2012, I created a curriculum. I was working at Shorter University, finished my DBA, got a nod to go work at Shorter University. And while there, I was able to go talk, it was like 2014. I created this curriculum based on busy seasons, busy season 1, busy season 2, busy season 3. And real, in fact, I'm talking to Denise about this right now, and Mike DePrisco at the IMA. I'm sorry, Denise Froming of the Cal CPAs, and also
Yep.
Mike, our illustrious leader, about this particular curriculum, because this is how I think it needs to be taught, because I've been there. I know what it's like. So I create this curriculum, and it's based off busy seasons. What does that mean? It means when you're a staff and you come out into the real world, there are certain things that you are 100% absolutely going to do. And if you think it's inventory, you might count something, but you're not going to do the inventory in the back. That is a senior level exercise, because it's not just counting things, right? So they'll send you out there to do the physical inventory. You're going to screw it up. Everybody knows you're going to screw it up. So they'll fix it on the back end in the numbers. That's just part and parcel of the whole thing. They know you're going to do things wrong, so they fix it on the back end. So mine, you come in, you do cash, you do you do a handful of the audit that you would normally be taking on. You get really good at doing those 3 things. You're only there for like a quarter and or a semester, right? Move into the busy season 2. Busy season 2, you have some of the things that a second year would do, but to teach you some of the social, political, and economic things that are squeezing down upon you as the now second year, you are also responsible for training the first year. That is part of your grade. Well, why would you do that? It's because if that engagement fails, the whole thing fails, right? So the busy season 3, now you're the senior, right? And now you have 2 people that you're overseeing. That's part of your grade, is how well they do in their stuff. Yeah. Oh yeah. You have to teach. And then you also take this standpoint of, now you're in charge of the budget, because even though the manager's there, the senior's really in charge of the budget. And now you have the political ramifications of what if you get squeezed by your manager, you get squeezed by the staff. Senior is one of the worst jobs on the planet. And you're there for 3 years, you get to make manager. And finally, it used to be an Anderson, you get like a golf club membership. Joking, but it was like you've arrived, right?
Yeah. Yeah.
It's a grind. So what ended happening is that I brought this to the American Accounting Association, and this is where I knew I was onto something. Talking about this curriculum, I almost won the Mark Chain Award, which is for the best curriculum. They said it was very professor specific, though. Like they would need me to teach it. So I was like, okay, maybe that's not the right time. But I was teaching on this in a breakout session, and I remember specifically one woman who had 35 years of teaching experience. She did 5 to 7 years in public accounting, and then she moved over to being a professor, had her PhD and everything. And she came up to me and she says, I remember the day that I felt like I wasn't good enough for accounting. And I started asking these questions around, like, because the dissertation said one thing, and I was like, yeah, this is pretty spectacular. It took anywhere between 6 to almost 24 months for people to actually settle into their role.
Yeah.
And when were they getting fired? Around month 13. I was like, whoa, they haven't even, they're so cool. Don't give up on them. They've already been weeded out. They made through the weed outs in university level. They're here. They're smart. Bring them along, do better management is what you're doing. And so, I would have stories from all over the place of people coming in and it's like, I remember this. I remember having that first year shock, and it was devastating.
Yeah.
Like, yep. And so that led me kind of on my crusade. It's like, okay, I've got to figure this out. Well, then 25 years happened, and I started, doing my own thing. Well, now that I'm back in the entertainment industry with the Savannah Bananas, I got one foot in the bananas. I got one foot at SCAD, Savannah College of Art and Design. And now I'm working with creatives who don't want to learn accounting at all, but they have to because they have a bunch of intellectual property with their paintings, their sculptures, their video games, everything, their fashion, right? They're going to have intellectual property put out there. And I basically tell them, like, look, on this side of heaven, we need money. So you're either going to go work for somebody else who's going to take that intellectual property and make a bunch more money on it than you are, or you can go hang your own shingle and do it yourself. If you're going to do it yourself, let me show you how not to get screwed in business, right? So basically, it's called strategic financial management, 3 big words, but basically says, I'm going to teach you how to own your IP and make sure that you know how the fundamentals of running a business. And so that's where I am right now, and that's why I'm extremely passionate about it. To kind of further that to one more 15 more seconds. There was no book. I was using the Queso and Wygant cost accounting book, 400 pages
Yeah.
thick, hardcover. You know what I'm talking about. We all
Yeah.
taken
Yeah.
it. We've all like thrown it across the room. Now, sometimes people sit on it in their cars now to reach the pedals. But there is no book that can explain accounting in a way that is not threatening. Threatening in the sense that it's extremely technical, and if your brain doesn't work like that, it's even for business and accounting majors, it's very technical. It's very boring. It's very yeah. So I set out to write a book. I finished it, and so I'm talking to publishers right now to get this thing out there so that we can just I want to make accounting more appealing to people so that they don't look at it and go, I don't like it when kids come into the room and they're like, oh, I have to take accounting. It's like, I want them to come and like, dude, I've heard about your course. I can't wait to see what we figure out, what I figure out about my life, and I want to do accounting. I want to do finance. I want to do these things as opposed to, my mom and dad, I'm an athlete. I have to take this stuff. I want them to really appreciate the discipline the way that I do and the way that you do and everybody else around us does. I think that accounting is such a beautiful discipline, and we should stop weeding people out at the very beginning, but we should probably give them a better intro into the family, and then say, hey, listen, if you don't look, you want to come into accounting, you don't have to be a CPA. I mean, but if you got an accounting degree, why wouldn't you want to be a CPA? But it's okay if you're not. There's also the management accountant route, and it's not like the CMA is not as worthy as the CPA. CPAs, you guys you take a different route. It's now the CPA is still considered the crown jewel of our discipline. Okay, that's fine, but you don't have to go do public accounting in order to have a really nice and wonderful career in accounting. In fact, I work for the Savannah Bananas. I got an accounting degree. I work for the craziest, a traveling circus, if you will.
Yeah.
And that's one of the things that I really want to impress upon these young kids. I'm sorry, students. They're all younger than me. Is that a career in accounting, an education in accounting, opens up so many doors for these individuals who maybe they just don't know what they want to do. But I can guarantee you, if you go to school and you have no idea, get the accounting degree, you will have options, and they're options that when people talk to you, they don't kind of they listen to your opinion because you know what's red and what's black. You
Hmm.
know what's revenue, you know what's expenses, right? You know those things. And at the end of the day, look at politics, look at social media, look at everything. It all comes down to dollars and cents. And if you understand the bottom line, top line, gross margin, bottom line, those things, you are going to go way further than somebody who doesn't understand those things and has to basically be given a budget and be told, hey, you went over your budget. Sorry. You get to actually make the budgets.
I love your story because it kind of shows how everybody's journey is so different, and like the way you got to where you are is your journey, and it's amazing to hear that story. And I think about how every student, like a student who might be listening to this, or somebody who's in their first couple of years being like,
Mm-hmm.
man, I wish I had his class, or like and I guess, how do you kind of close that gap to get to the accounting students who are coming in there? Because not everybody can be near Savannah and take that class and take
Yeah.
your class and take that curriculum. So, how do we close that gap for accounting students?
Well, I appreciate this question, Adam. So what I was talking, in fact, I think I will be with you guys when is your student leadership program? It's in
It's in
November.
November.
Yeah,
Yep.
I think I'm going to be there. I think that's I was talking to Leanne and Mike, and we'll probably be in front of 4 to 5 student leaders,
Hmm.
right? And
Yeah.
I think the way we do this is one, it's got to be bigger than me. I mean, I have a pretty loud voice. I have a pretty stout platform, but people don't look at the Bananas as an accounting organization. They look at it as an entertainment organization, right? But for the time that I have here at this particular platform, people, some for whatever reason, they find me interesting, right? It's one of the reasons why we're having this conversation right now. It's like if I wasn't with the Bananas, you'd be like, yeah, he's just another CPA. I understand. But what I'm thinking is that so with this book that I've written, and by the way, this is not a ploy to sell books. What it is, it's a ploy to have people look at a new text and look at the way that it's being communicated to people, and that if it starts resonating, if like it's a cost accounting book. Here's what I think. It's a cost accounting book with an entrepreneurial jacket. And what I mean by that
Yeah.
is that it's storytelling. I don't have to give you a lot of numbers. And I know that people say like, oh, accounting is just math. It's not just math. It is not just math. It is not just math. It is a language. We just happen to use numbers in order to communicate what we're trying to say. And a lot of us, I would say a majority of us, are not very good at communicating what we're trying to say. We just basically,
Hmm.
hey, here's the numbers. And someone looks at it and goes, so what am I saying here? What are you saying? It's like, you're not going to go out of business next year. Great. Can you give me anything else? Like, that my audit fee will be X. No,
Yeah.
that's not how you do it. I think that we need to do a lot more on the side of communicating, like the storytelling aspect of what we do, and really getting into forget about business communications. Everybody knows how to write an email. Everybody knows how to text. I mean, some people are, the emojis are back, so we're all the way back to the Neanderthal days of writing on caves and people understanding those things. Of course, different context, different situations, but what I see here is that if we can introduce, like seriously introduce storytelling to the accounting curriculum, I think what would happen, two things. You'd have people that finally can understand how to actually create an arc, beginning, journey, ending, denouement. Oh, what happened? Like the crescendo, bang, what happened? All of a sudden, you'll have people that can discuss financial things in a way that actually can tie in relevant information, can tie in current information, can tie in the
Mm.
fact that the person's might have some other things outside the office that they're struggling with. Hey, work that into the conversation. So it's, hey, this is while this is really important, this is not important. This is not that urgent right now. You can wait a couple of weeks until everything's done. Clients just want to know that you're listening, that they're seen, right? This whole scene thing. And that's all that stuff is accomplished inside what we call storytelling. I mean, we've been doing it for eons.
Yeah.
Bonfire, wood, people around, people looking over in the windows, like what's the old guy with the big old beard and the naughty's staff saying? And he's just spinning a yarn, man. We need to be better at doing that, taking technical information and turning it tangible. The instant we start doing that, we're going to start pulling people to our discipline, because it's not going to be so nerdy anymore. It's going to be fun.
Hmm.
And I mean, the basis of accounting, I have fun with accounting. I mean, sure, there's those days you grind, but the reality of it is that we just need to do something different in our curriculum in order to make it work. And this is where I think when you say bridging the gap, I think if you have that storytelling element, if we teach them how to run a business first, right? No, I just don't care about the financial reporting side as much as I used to, because financial reporting goes the CPA route. And while I have I'm a CPA myself, I just don't. I think that there's a broader base here that we need to be speaking with, and it's that accounting in and of itself is such a vibrant and an elastic career that if everybody needs to be able to tell a good story, and
Hmm.
that's not embellishing. That's just taking facts and weaving them into a way that actually makes sense to someone on the other side who has no idea how to interpret financial information. And now they're watching Fox News Business, they're watching MSNBC or whatever they're called these days, all these different things, and they're trying to gain all these insights. And these people, they don't really know what they're talking about. So the most trusted advisor that's going to be in that room, their accountant, needs to be
Yeah.
better at communicating the stuff that they know inherently. It comes back to those stages of competency. If you're really
Hmm.
good at what you do, there's a level where you go. It's like unconscious, then you go to conscious incompetency, and then you go to unconscious competency, then conscious competency, and it's up at the very top. It's called reflexive competency. This is the one that's very dangerous. So at the top of the period, why is it dangerous? Because you know it so well, you can't even teach it. This is the moment where partners come in, or just CFO or someone comes in and they're like, hey, I'd like you to do this. And they get that look like, what? Like, you know what? Don't worry about it. I think it'll take me 15 minutes. It'll take you 3 days. Just move aside. I'll just go ahead and do it. You know, that's not what we need to do. Now I get that sometimes there's deadlines, but
Yeah.
that's the reason why people are leaving the profession, because we already know that we're getting, I don't want to say broken, but let's say they're not finished vessels yet, right? And say they still need the little ear put on the mug, so it doesn't hurt, it's not too hot, and you could drink the coffee out of it. So they're not finished yet. They don't get finished. We know they don't get finished till at least 2 years into their like actually getting real experience. And if that's the case, the worst thing we can do is decide not to use them, is decide not to teach them, because now it falls
Yeah.
on us. And that's where kind of everything falls into place, to where there's two things we need to do. We need to help them learn how to storytell. We need to learn, like, bridge that gap, so that when they get here, they know they can move down that learning curve much faster. But secondly, when they're moving down that learning curve, you and me, the seniors in the room, we need to be good enough to know that if they're treading water, to be like, hey, let's throw them a lifeline. Let's not just say, oh, just go, work it out. You're gonna get it. Gotta get it on your own. No, we're a team. Pick them up, show them how to do it. Go back, let them see if they did it right. If they did it right, slap them on the back. Hey, you did it. Let's give you some more complicated stuff. They did it wrong. Fix it. Make them do it again on another engagement. This is it's training, it's mentoring, it's not giving them
Yeah.
the fish, it's teaching them how to fish. And that helps us up the line, because in 5-7 years, that's going to be the person that's going to be coming up the ranks, so that you can retire. you know so I think it's one of those things where I go back and I say, what's more important, your dinner plans or your succession plans? Because if it's your dinner plans, you don't have succession plans.
Mm.
So you might want to stay at the office a little bit later and help that first, second, third year staff actually be productive, because they're going to look at you later on and be like, there are 5 people that I know that helped me out, and that person, this is the person that taught me this, and they'll never forget it. So I think that's how we bridge the gap. Better education on the university side, but also we have to on the inside, mentorship. We have to be able to turn around and pull them into our circles, and not think that I'm just too busy to train. No, because at one point in your career, they thought the same thing about you, but they moved their schedule aside and brought you into the fold. So we just have to remember what it was like to be them.
Yeah. Well, and that takes a little bit of putting aside our own egos and saying, okay, let me put aside, like, yes, I did this 20 years ago and this new person needs me to do it. And it's saying, okay, let me step down and say, yes, I will help you, young
Yeah.
Padawan.
Well, it's actually one of those things. I was talking with a woman the other day. She's homeschooling her kids, and she was surprised. I said, "Oh yeah, we homeschool our kids too." And she goes, "Oh my gosh, so what was the worst part?" And I was like, "Honestly, the worst part is relearning the stuff that I learned years ago, thinking that I still knew it, and then realize, oh, I forgot all that stuff." I think one of the reasons why a lot of mentors don't want to get into the nitty gritty is because I think they've literally forgotten how to do things. Because technology, okay, you want to talk about AI? AI coming in. There was an article the other day about KPMG wants to bring people out, and within 3 years they're going to be managers. They're not even going to train them as staff auditors anymore. Like, hold the phone. One, lawsuit. If I was a client and had those kids, you're telling me that my audit's being done by AI. I'm not paying you. I'm not going to. Here's the thing: if AI is going to do it 10 times faster, 100 times faster, does my fee go down by 100 times, right? But secondly, these kids don't even know what they're doing on cash accounts, and you're gonna accelerate them into running, like dealing with management and being the face for the client and dealing with utilization and realization on jobs. And then, oh, and by the
Yeah.
way, you still have to deal with the people underneath you who also don't know what the heck they're doing. It's like, what are you doing? It's like, if there was a vice, you have just put them in it. And so what's going to happen? You might as well have AI just do the entire first 5 years of accounting, because those people are going to wash out and be like, screw Big Four. I'm going to go work in a
Yeah.
private company where I can actually learn something. It'll be very interesting what happens. I think it's a lot of bluster. I think that because private equity is starting to get in the mix, they're like, oh, profit, profit, profit. So you got to push down. But what we're going to see is we're going to see people are going to get really smart. they're going to take their talents elsewhere, or they'll create their own firms with like CPA Club is doing out there in California. They're going to do with value pricing, and they're going to take over all the work from the big four. They'll siphon it off a little bit here until the big four are not the big four anymore. There's just the four, and they're doing it to themselves, man. Doing it to themselves.
Yeah. Well, it sounds like it would need a whole culture change in organizations in order to do the things you're saying. Not all organizations are set up to have that culture of teaching, of mentoring.
Actually, I disagree with that because I think
Okay.
that they're there. I just think that they don't emphasize it. If they were, because the knowledge base is there. There are people in all firms who are, there are some people who are a little bit better with people. Look,
Yeah.
there's some people you don't want around other people. Look, just go in the closet, crank, right? And that's okay. That's what's great about accounting. If no matter which side of the introvert extrovert spectrum you're on, you can be in a closet and crank and make a really good living, right? But for those who are extroverted, who actually enjoy being around people and numbers, I think it's there. I think this comes down to, again, the pricing side. Why would you sacrifice a couple hours of training when you could be billing those couple hours because that's what your value is to the firm? Your value is how many billable hours you're pushing in there. And it's like, I don't have time. So what you do is you push it down to the senior manager. You push it down to the manager. You think they have more time? Heck no. You might have these things stacking up inside your environment. You're on your desk. You have all these work papers everywhere. And you're like, oh my gosh, look how busy I am. It's like, you wouldn't be that busy if you trained the people underneath you how to do some of this stuff. And then you're just basically reviewing. But they've lost, it's a lost art.
Yeah.
I think what should be, what I think personally, I think I would say partners are tough, but partners have enough time. They have enough time. They say that they don't, but they do. I mean, I've looked in some partners' offices before, and it's like, yeah, they're not doing anything. I'm busting my butt over here. They're not doing anything. I think every partner, before you make partner, should actually go and teach adjunct at a community college or one of the intro years. You learn very quickly how much do we really need to be purposeful in our instruction. And it's not, they're not dumb questions. They're questions we used to ask. We know them now, so we think they're dumb, right?
Yeah.
So I think that having that insight of going and actually seeing the frustration on a student's face, they want to do it. They want to get it. And they want to be successful. Just like they looking at you, like, I want to be like you someday. Okay. How do I get there? You got to do X, Y, Z. And then when they get there, they're like, this is not this. I've been sold a bill of goods. Like I feel depressed. I feel dejected. I picked the wrong. Why am I even here? And then that one person comes in and goes, hey, come here. Let me show you how to do this. And then their world completely changes. Like the scales drop from their eyes. There's a light in them, and they do the same thing for everybody behind them and around them.
Hmm.
So I think there's the proclivity there to get it done. I just think that firms need to make it a priority, just as billable hours in busy season are a priority,
Sure.
in my humble
Yeah.
opinion.
Well, and I've always looked at it, when somebody comes into an organization, especially if you come in very high in an organization, I always feel like that person should go down and answer phones for like a week. Hear
Yeah,
what the
sure.
customers are saying. Be at the front lines where your customer service person is answering those questions, and hear what the questions are from the people that you're actually serving, and then understand, oh, maybe this is how I can do my job better because I'm understanding what it's
I
like at the
agree.
front lines. Because otherwise, you're in ethereal, theoretical world, and you're not actually hearing what's the customer is actually saying.
Yeah, that's a very wise statement, and I agree with you. I think that there's a lot to be said about having that being disconnected from the actual grind that's getting you to where you want to go, and
Yeah.
but it happens over time, and now it's okay. Let's say this: as you move up the ladder, your skill set changes, right? You're less in the weeds, you're more overview, and so you have to have really good people underneath. You got to make sure that stays stout. But your job now is to look out across the horizon and say, okay, well, there might be a new client. How can I service them? How can I sell more work? And again, I'm just talking about public accounting. But in the private sector, it's very similar. As you start moving up, now you're not really dealing in the weeds of the AP and the AR and those things. Now you're looking at budgets, you're looking at performance, you're looking at FP&A, right? And people rely on your research and your analysis in order to make decisions. Like they're literally in a private company. If you get an assumption wrong, is it going to blow up the company? Well, I mean, sometimes Sometimes it will. but, but no, I mean, it's not like we're doctors and like you make a mistake and someone's going to bleed out and you lost your patient. It's like at the end of the day, yeah, we might lose a few dollars, might lose a few billion dollars, but the thought is like no one is gonna die because of your wrong assumption on unearned what is it just pick a management estimate, right? So but the thought here is that as you start working your way through these things, you will eventually come with your own knowledge so that now you're a functional unit of the management team, right? You're managing people underneath you, and then you're also reporting up, and now you have a little bit more as to what you understand what your job is inherently as far as technically, and now it's a matter of how do you incorporate this. And I think that's what takes those people to the next level is that once you understand that piece, and now you start selling business, you start getting asked to come to the rotaries and all those different things where there's the business social mixers and what have you. Now you're in the mix, and people want to do business with you. They could care less about your company. They say, hey, I like that person. I know what they're about. I would like to do business with them. They're part of a firm. Oh, they're this. Oh, they work here. So the skill sets change as we go up. But yeah, getting
Hmm.
back to what we were talking about earlier, as we move up, a lot of us start shedding some of the stuff that our brains just don't want to hold on to, and so we have to come back down, and like get on one knee, just like you would at a baseball game. Get down on one knee,
Yeah.
pull up the trousers, and say, "Hey, man, what's going on?" And like, I can just see like there's a little T right here, a little kid, he's like kind of crying, like, "Hey, man, what's up?" Just get
Yeah.
the ball off the tee, man, and then run. That's kind of what we need to be doing. But I think people are afraid to do it for a couple of reasons. I think that there is that productivity marker, that your realization, how much are you realizing in your budgets? Again, public accounting wise, but from the private side is, hey, Did you close in 3 days? Like, well, no. What were you doing? I was training my staff. Well, we don't have time for that. Whoa, we do have time for that, so
Yeah.
it's a lot of push and pull, and I think that at the end of the day, the I think the organizations that are going to be successful have a culture of internal training where I mean people just aren't afraid to have people who are working for them who are smarter than them, and I mean some of it's that too, people don't want to train really smart people because they're like, oh my gosh, they might take my job. Like, yeah, you got to get out of that. So anyway.
Well, you talk to some certain leadership gurus, and they'll tell you you should be training everybody to raise up to come up behind you, so they will take your job because you're the one moving up because you're bringing up everybody around you, and that's the
Agreed.
mark of a great leader.
Well, and so I agree with that. And so when it comes down to when people are not training, the question is
Hmm.
it because they distrust management? Because do they have a contract? Do they not have a contract? If you have a contract in place, it's so much easier to train people underneath you because like you're not going anywhere, right? But if you don't have a contract, you're right to work for hire. It's kind of like, well, gosh, if I train them and they could take over my job, I mean, now I'm super expensive. They could easily have a boon by just see ya. We don't need
Hmm.
your stuff anymore. Like there was a thing on LinkedIn just the other day that I thought was really fascinating. They were talking about when a CFO steps away, right? I'm using CFO as an example. When a CFO steps away, that it's not just the accounting that's actually there's not just upheaval in accounting. There's upheaval in the human resource section because CFOs bring more than just a strategy, a number reader to the table. They're usually the person that a lot of people go to because they don't want to look dumb in front of the boss. And the CFO, I would say the CFO and finance controller, what have you, they're usually the ones that say, "Hey, let me bounce this off you. What do you think about this?" Right? And you'll have marketing people, you'll have HR people come and ask questions, and what because they want to know one. The finance people, they shoot it straight. Give me some facts, I'll shoot it straight, right? And also, we're very busy people, so if we're going to take our time and just sit there and talk to you, we're going to give you a good answer so that you don't come back. Right? It's
Hmm.
like we're going to give you the information you want. But the thought is that if someone in a valuable position like the CFO or the controller or senior manager, what have you, were to leave, the company actually loses a lot more than just accounting talent. They lose a person who has been a confidant for many, many employees, and like a consigliere to a lot of other executives and maybe even board members. CFOs, and I would say just in the finance and accounting, I keep saying CFOs, but really the finance and accounting world, we know a lot about what's going on in organizations because the legal bills come through, the invoices come through. We know everything that's happening.
Yeah.
But and so then to have that added ability because people come to us because they trust us. We're very trustworthy. I mean, accountants are very trustworthy people, and as long as we don't abuse that trust, people will continue to ask for our opinions, what have you. And so we tend to know things more than what HR does because people don't even want to complain to HR anymore. HR is like, yeah, I don't need it, and just toss you away. It seems to be finance and accounting is starting to be that internal sub HR function where people say,
Hmm.
I just want a real answer. Like, don't give me any drama. Like, what are you saying? What are the tea leaves saying? And they're taking that information and moving with it because we're the strategists, right? We know where these things are held. So
Yeah.
also puts the onus on us to be very cautious in how we advise, right? Don't want to do anything to create any negativity or what have you. But the thought is though is that if we're out there and providing these kinds of services, then when someone from a finance and accounting role leaves the organization, it's not just ripping off a band-aid. You're getting some skin, the scab with it. That was really gross. But it hurts, is what I'm saying.
Yeah.
It's not just you're just replacing a number person. You're replacing somebody who people really rely on professionally and personally. So I think these roles are vital. I think that when you talk about students getting into these roles, it's a it's a fun place to be because every I would say for the most part, everybody respects you for the knowledge base that you have and how you apply it and how you can get things done. Everybody looks to the finance people like those people are really smart folks. But secondly, it can also be incredibly rewarding because when people start coming to you and asking you questions about other things besides, without a dollar sign on it, you're now in a position of it's a position of intimacy. I know that's a weird word to use in a business context, but you know what I mean, where people don't mind opening up to you and asking you about it
Hmm.
because they know that you're going to be objective with what's happening. And by default, people that work in finance and accounting, they know that confidentiality means something. And so a lot of times people in finance and accounting, they just don't talk about that stuff. So it's like
Yeah.
you talk, you come up here, you talk. It's like, okay, hey, you got anything else on your mind? Okay, you good? All right. Let me know if I can do anything for you. I get back to work. They feel better. It kind of works, and it works like that everywhere. It's not just the bananas; it works like that everywhere. So,
Yeah.
um, not sure how we got on that rabbit trail, but I liked it.
That was a good rabbit trail. It's funny when I talk to when folks hear I'm talking to somebody from like a different industry, like, the Savannah Bananas, they always want to hear the question, like, what's it like working in that different industry? And it's funny because most answers to the question are like, well, accounting is accounting no matter what industry you're in. And so I wanted to kind of flip that question around and say, is there something new you've had to learn because you're working for the Savannah Bananas in your role as the CFO?
That's fair. So one of the things that when I first came in, I had never worked for a sports team, right? I've always wanted to work for a sports team. So when I came in, it was actually one of those things where I had a conversation with the president, and he's like, "Look, I get it. I get it that you've never done this before, but your body of work speaks to it's not that difficult to learn, right?" One of the things I did learn, which I thought was really cool, is that KPIs really do matter, and matter in the sense that, but they're hyper specific to the organization and the industry. Um, when I teach about KPIs, whether it's SCAD or shorter or wherever I was, I don't really spend a lot of time on ratios per se because ratios, in my opinion, and I will say in my opinion, they're not really fruitful in the analysis of the organization. I mean, day sales outstanding, all these traditional ones that you learn in accounting school and in finance school. I think they're more of talking points than anything else. I mean, again, you can go to Fox Business, you can go look at Mad Money. That's what they chirp about, right? But then again, they put an algorithm out there, and all of a sudden the algorithm is supposed to speak to like the health of my working environment. That's all BS. So it's a
Yeah.
number that an analyst can look at and go, oh my god, is the stock going to go up by 2 cents or is it going to go down by 3 cents, right? So I don't really focus on ratios, but I've come around to KPIs, and what I mean by that is that, like specifically in the baseball industry, or really just the sports industry, we have what's called a per capita. And a per cap, you can use a per cap very similar to it's getting really nerdy. We're about to get nerdy. When you look at vertical analysis versus horizontal analysis, okay? And what I mean by that is you take an income statement or P&L and you're saying, or a balance sheet, but we'll stay on the P&L, and you're saying, hey, I want to compare two companies, right? A company that's a $5 billion company and a $5 million company. Well, how in the world are you going to do that in the context of like that company's way too big? They have so many other processes, blah 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 blah. Well, then you have what's called comparable statements, right? Comparable statements. So you take it and you say, okay, let's take the percentage of the revenues, and so that's 100%. And as we start moving down, cost of goods sold, gross margin, and I'll get down into SG&A and all your fixed costs, it's a percentage of sales, right? So now all of a sudden, this $5 billion company and this $5 million company, you can look at them and go, oh, look at that, their cost of goods sold is 36%, mine is 34%. It's like, oh man, I'm beating the industry giant, right? Now, where do you get that information? A lot of these guys are public, right? So you can actually look at those things.
Mm-hmm.
So, but if you wanted to identify how to look at your organization versus a big organization, you can in that manner. Well, per caps are very similar to that in that it's like a universal metric across all of, I mean, you could say all of entertainment, but let's just keep it inside sports because sports is a little bit more like I could say Broadway and things like that, but food and beverage and Broadway is probably a little bit different. But basically it's the number of people that come in. So let's say you sell, let's keep it simple. Let's say you sell 10,000 tickets, right? And 10,000 tickets, let's say 9,000 people come. All right. So you're at a 90% in this case, net realization rate for us, but it's 90% scanned rate. So your redemption's at 90%. All right. So let's say you sell $27,000 worth of merchandise. Well, $27,000, I'm sorry, $270,000 in merchandise, and you have 99,000 people in the building, right? You don't use 10,000 because there's 1,000 people that aren't there. You take that 9,000, you take the 270, divide it by 9, and all of a sudden you're at what's considered a $30 per cap, which means that on average, those 9,000 people spent $30 at your merchandise tables, right? Now, did every single person spend $30? No, some people spent 180, some people spent 5, whatever it is, but the average comes out to about $30. Um, why you can take that? Now you can do that with merchandise, you can do that with food and beverage, right? Why is that important? Because now you're getting down to the per person cost. So I could say if someone spent $30, average $30, how much average cost were the things that they purchased, right? If my average cost is anywhere between, if it's like $15, I'm at a 50% margin just on materials alone. I haven't included the labor or the overhead or the logistics of even getting that stuff out there yet. So I like $30 and $15. Whoa, what's happening? Or if it's down to like maybe like a $10 or a $9 cost, like whoa, we're like down underneath 34%. Hey, good job, team. So there are all these little things that can really shortcut the analysis on how well an organization is doing at a particular, not only a particular event, but also across across a series of events. So like a weekend or whether it's a month or a season, and those become the little canaries in the coal mine. They go, okay, what promotion did we do on this one night? That led people to buy more hats, right? And okay, so let's really find that out because a lot of times people just need to know how their marketing is actually translating into their numbers, specifically from an accounting standpoint. And so that per cap can help. So one of the things that I found is that not necessarily KPIs per se, but the I'm sorry, not necessarily ratios, but certain KPIs for certain industries. And again, it becomes very, very specific. Once you understand how that rolls into the overarching operation, you can then start moving into operating off of percentages.
Mm.
Instant you're able to the instant you're able to move away from dollars and move into percentages is the day that you own your environment to where someone you can look at it. In fact, you probably get this. There are those people that it used to befuddle me. It was like that guy's looking at a P&L and he's like telling me all the things wrong with this organization, all the things good, and like how in the world are you doing that? Because in his head he's looking at it going, "Da, da, 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 this balance sheet versus this P&L that doesn't match,"
Yeah.
and he's like, "Brrr." And so you look at that and go, How do they just do that? Well, it's because over time, you get good at this, but also you know what to look for. You know where the warning signs are. You know where people are gonna, if they're going to do it, where they're gonna hide it. And I think that's one of the things that when you start looking at, when you start getting into accounting, specifically to my industry inside, again, baseball, banana ball, what have you, per cap's a big deal. And if I understand what those per caps are, after every game, I can look at those per caps and go, is it above? Is it below? Is it a AAA game? Is it a Major League Baseball game? Is it an NFL game? Football turned baseball. And all of those have different per caps. And if we're within that threshold that I think we got, then I feel good. If we blow through that threshold, what in the world did we do? It's not good. I don't just give myself a high five and be like, oh my gosh, we did it. It's like, what happened? What did we do here? And then also on the flip side, if it goes below that per cap, it's like, ooh, were the lines too long? Was something not priced correctly? Did we like fail on one of the sales? Did we just give away some stuff for free and it didn't come in? So lots of different things you can learn from those little things. I would say I just don't spend a lot of time with ratio analysis, but KPIs are important.
Yeah, that's awesome. Well, Tim, I truly appreciate you coming on the podcast, sharing your insights, sharing your story a little bit with our audience. It's been a great conversation. I just really want to thank you for coming on.
This has been Count Me In, IMA's podcast, providing you with the latest perspectives of thought leaders from the accounting and finance profession. If you like what you heard and you'd like to be counted in for more relevant accounting and finance education, visit IMA's website at www.imanet.org.